Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A reactionary bearish black crow yesterday with elements of a possible hammer pattern there after the previous session's immediate countering bullish harami. The fall, interestingly, closed below the recent 50% Fibonacci line at 69.76. And the low was halted by the lesser 38.2% Fibonacci line of the same move at 69.19. However, I suspect the January high at 69.10 and the slowly rising long moving average below, currently 68.84, may have had a decent amount of influence in it as well. All this is in the shadow of September's outside month pattern. There is now also one developing pattern which may quite possibly add to the strategic implications of the market. You see, we have a possible bow tie formation made up from the short moving average, currently 70.15, the short medium moving average, currently 70.57, and the medium moving average, currently 70.47. Now, the crossover was made on the 28th of September. Thus, we may see a move in the direction of the outgoing moving averages when they become clearer, some 15 to 20 sessions afterwards, that is between the 19th and the 26th of October. Please note this bow tie, like many of them, is not perfect. Now so far today, a higher open, back between the short moving average and the short medium moving average, and currently just over the medium moving average. German DAX futures. A reactionary bearish move yesterday to the previous session's immediate countering bullish harami. Perhaps most interesting of all, apart from this being a new low and low close since, well, at least May, was how it was a clear close below both the September to December 2020 head and shoulders neckline, currently at 15.096, and the slowly rising long moving average, currently 15.058. It also realigned the October 2020 to date uptrend. There is also a possible pattern soon in the making, a possible dead cross of the short moving average, currently 15.625, down through the declining medium moving average, currently 15.603. It's not happening yet, but it may do. Just please remember, it is a lagging indicator. So far today, a much higher open, still within yesterday's main action, but back up over the long moving average, but below the neckline. Prices have risen since the open, but in a very limited fashion, as we're still within yesterday's range at this time. E-mini S&P futures. The intraday indecision we've seen since last Friday seems to be resolving itself, as we had a hanging man pattern yesterday after the previous session's third countering bullish harami. We still have overhead the extension of the upper trend line, currently 43.59, of the May to July rising wedge pattern, as well as the obvious rising medium moving average, currently at 43.72. Followed by the more acute extension of the lower trend line, currently 44.11, of the same rising wedge pattern. However, I suspect that apart from the medium moving average, the main immediate resistance topside will be the newly drawn early September to date downtrend, currently 44.33. Please kindly remember that all this sits in the shadow of September's monthly key reversal down. This obviously has some big strategic implications, and whilst I do not necessarily expect an immediate huge move lower today, this week, or maybe even this next month, it is worth remembering that this exists. Additionally, and it may be a big additionally, there is one more pattern that is still out there. A weekly key reversal down formed last week. Now so far today, a slightly higher open and a follow-on to the bullish hanging man pattern seen yesterday. Prices have pushed up through the extension of the upper trend line, the rising wedge pattern, as well as, and this is perhaps more important if we manage to close up here tonight, as well as the medium moving average. We are now approaching the broken May to June uptrend, May to June uptrend. So we're coming in from underneath it, and with the downtrend above it now looking quite close as well. French CAC 40 futures. A third countering bearish harami yesterday. Now this number of intraday counters just goes to show the level of intraday indecision here, seen here in this market. The top side was again being capped by the broken upper downtrend trendline extension of the recent possible June to September diamond top pattern, currently at 65.42, with a further resistance overhead from the flatlining medium moving average, currently at 6600. On the wide, it seems the market has been held with a projected 50% below at 63.48 and a mid-June high at 66.87. Now, going back a bit to the possible diamond top, the June to September diamond top pattern, if this does indeed turn out to be a diamond top pattern, has a potential target X in the 62.42 area. It is far from a perfect diamond, especially as the low was formed over before the high of the diamond. However, it is still there, and I should also point out once again something I've recently highlighted. The first 2 days seen 2 weeks ago could still be seen as an island bottom, with all the implications that brings. So far today, a gapping higher open based on the top side of the broken diamond downtrend and an attempt higher to tackle the flatlining medium moving average. But a seeming lackluster attempt right now. We still currently have a gap between 65.41 and 65.43. So just bear that in mind. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.